focus on the Omicron variant today as fears begin to fade a little bit about the impact of that on the world economy. Reaction now from National Taxpayers Union's Brandon Arnold and Annandale Capital founder George Say. Good to see you both, gentlemen. Thank you for being here. George, let me go to you first. The market action today. We actually just came to our intraday high. It was 736 to the plus side on the Dow. It's still a very healthy 715 points on the plus side. It seems more like more than just a relief rally here. There's something going on that is really reacting to what this world economy is capable of doing, capable of producing.
You know, David, the market has really been fearful of a downturn for quite some time now. So the fact we got a sell-off the last couple of weeks was eminently predictable, and the new variant was only the catalytic converter, so to speak, for that move. But the reality is, with the 10-year at $1.40, and with no alternatives to equities are going to continue to rally. So it's hard to see us taking a sustained downturn with interest rates being negative after inflation. But so I think we're going to still have a healthy market.
Yeah, George, I want to stick with you for a second on that. What happens when rates do begin to inch up? Are people going to find an alternative to stocks?
Well, that's the kryptonite to the market. If rates go well north of 2% on the 10-year, then you've got active competition for equities, and equities will probably take a very healthy decline. But they've just been unable to do that. And even though the Fed is going to taper, it's still buying an awful lot of Treasury securities, and which means there's not a real price for Treasuries. The Fed is artificially keeping them extremely low, and that's good for the federal debt and paying the federal deficit, and it's also good for equities.
There's another thing, I think, Brandon, that's good for equities, and that is that the president's having trouble with his Build Back Better plan. I mean, again, at first they were thinking of passing the thing before we even knew what's in it, but the more we delve into the details of everything it's doing on immigration and supersizing the IRS and just the expense of it all, which is what Senator Manchin is focused, it's becoming a very tough sell for the president. He's out there trying to sell it, but again, it's a real tough sell, is it not?
Oh, absolutely. The more people find out about this bill, the less they like about it. I mean, we just found out recently that in its very first year, it provides tax cuts in the amount of $47 billion to people that make $1 million or more, a huge tax cut for the wealthy. And in the last year of this plan, it provides tax increases for people making as little as $20,000 a year. It's no surprise that senators like Manchin and Sinema and other moderates are starting to ask some serious questions about the manner in which this bill was put together and the need to really completely overhaul it. I'd like to overhaul it by throwing it in the trash can, but these moderate Democrats at least need to start picking it apart and finding some of these egregious examples of waste and unfairness.
Well, Brandon, they're not blind to the fact that the numbers don't add up. It's not fully paid for. The CBO has said that. Independent organizations have suggested as much. So how do they plan to raise the revenue to make it paid for? Or I hate that term because it could hurt the economic growth, which means it wouldn't be paid for. But what kind of taxes are we talking about? Raising capital gains, et cetera?
Well, I think what they're going to do is look less to actual revenue increases and more to just sandbagging and pretending like this actually will raise more revenue than it will, according to every bean counter out there. And they did this before with the IRS increase of the budget to the IRS. They're just pretending it's going to bring in $400 billion a year, even though CBO and other independent observers are saying it's more like $200 billion a year. They're just lying to us right now. It's completely ridiculous. They need to throw this thing in the garbage can, like I said.
Well, George, are you concerned? We talked about the uptick of rates that are coming probably later in 2022. But bottom line is, if you have rate increases with new taxes, you would definitely have a slowdown in growth, would you not?
You would, but I'm not too concerned about dramatically higher taxes. I think it's fascinating to watch Senator Manchin and Senator Sinema have more power in the Senate than the times of Lyndon Johnson, detailed by Robert Cairo in Master of the Senate. They just have so much power in the United States Senate. If we can limp along to 2022 where the Republicans retake the House, then the government gets basically stymied and can't do a thing, and that would be good for the economy and good for the stock market.
Well,
so I hope
Brandon,
we make it there without dramatic tax increases.
You're inside the Beltway, Brandon, and this is your bailiwick. What do you think? Is it conceivable that this bill could be put off till after the 2022 election?
I don't know if it'll go that far, but I think it is possible, it is likely, I should say, that it will not be passed by Christmas, even though Senator Schumer just a couple days ago said that's their intention. I don't see that happening at all. But I'm old enough to remember when they were trying to pass Obamacare, we suddenly had the Louisiana Purchase and the Cornhusker kickback and all of these provisions that bought off individual members of Congress in order to get this thing done. I don't put it past them to do that again.
The Cornhusker kickback. I remember that well. That was a pretty disgraceful moment for Congress. Gentlemen, great to see you both. Brandon and George, good to see you. Thank you very much. Coming up next, the Biden administration.